And so, to start off with, this week was a huge week in terms of bank earnings. The banks was going crazy. My thing is, how are the banks making money? Because there's no way. It said that the five largest banks reported 23 billion in Q3 in profits.
I mean, that's what banks do. Like, in the worst of the worst, they get bailed out, and in the best of the best, they're booming. So we're in a kind of transitionary period between those two things right now. I mean, the corona hit everybody, but banks are going to be the first to recover. So, on one hand, this is kind of like a sign that things are heading back to normal. Banks doing what they do best, cashing out, but also like they're always going to be the first one to make money when tables turn, and I think they're just the start of a larger trend for other companies to come in Q3.
The thing is, what I realized when I was reading an article about it. It said that the reason that, because Goldman, they had triple the amount of money in this quarter than they had before.
Mm.
So I'm thinking,
Wait, in Q2,
again, Q2.
but that's Corona, right?
But the thing is, they still beat the expected revenue in Q2.
Mm.
But they tripled. Like, normally, like, each quarter, I think that they said, like, yo, they actually, like, there's no reason that should have happened.
Well,
Type of-
here's the finesse with this whole Corona thing. So Corona happens, everyone's like, analysts especially are like, oh, every company's gonna have bad reportings, so they lower their expectations like drastically, and then like a company like Goldman beats expectations, even though expectations were already super low.
Super low.
And then going forward, they're like, okay, like we're gonna revise our expectations upward, it's like called the upward revision, but maybe they still do it like cautiously because they know like whether the effect of the pandemic hasn't shown yet, or they don't want to like overestimate how bad things could be. So then they go ahead and beat it again, but this time by even more.
So basically, this is how I'm saying. It's basically like a fake finesse. Because once people see,
Absolutely.
like, oh, they beat earnings, but it's like the earnings is really tailored for what's going on, which is really not wrong, but it's still not right.
Nah, yeah, absolutely, dude. Like every company that's been reporting, it's always important to look at the revisions and analyst reports, at least in this day and age, because when you see like there's been 11 downward revisions, that means like there was this expectation, and then they boom, 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 11
Every
times.
time. So low key, they really didn't hit the original expectation.
Yeah, it's like you
They
set
just
the
hit, yeah.
you set the bar super low for me.
Obviously, I'm gonna knock it up. Oh, that's
Exactly.
fair. But what I'm seeing too right here is they're saying that a big cause for why some of the banks, because Bank of America missed revenue. They missed their revenue by a decent amount, and that's why their stock had went down. But they said that J.P. Morgan, their expected revenue, they blew it out the box basically. And I think that one of the reasons was because they focus more on trading, while Bank of America actually lowered trading.
That's definitely the main thing.
So like literally, J.P. Morgan increased trading 30%, and Bank of America dropped trading about 4 or 5%. And Bank of America missed revenue, but J.P. Morgan hit revenue. So I'm thinking it has something to do with the fact that they said, matter of fact, we're not even gonna do what else we doing. We're just gonna trade.
Makes sense too, because like with stimulus money, people got a little bit extra cash in their pockets. Kind of, not really. Obviously, the pandemic hurt a lot of pockets, but there's definitely been a huge increase in the amount of people who are saying like, I'm gonna try trading. Like,
That's a fact.
I'm gonna at least try it. Like E-Trade, Charles Schwab's, they report like tomorrow or Thursday is what it be. Whenever you see this, they're gonna say the exact same thing. Like, due to the increase in the volume of trading, and so it's 100% due to trading, in my opinion.
Nah, it has to be too, because they say even Robinhood, like since the pandemic started, Robinhood was like getting millions and millions of accounts. But you know why I feel like that happened too? Because as soon as the pandemic hit, they were like all over social media. Everybody saw like the stock market go down, and people were seeing like 40K, like positive. They're seeing like 150% because since the whole market went down and fixed itself because of the stimulus, they're mad traders that traded for the first time that's seeing literally 5K return. And they're like, yo, what's going on? They post on these Snapchat story like, yo, I'm no longer working a 9 to 5. It's like, yo, bro, come on. This is your first trade ever and you're done? You're quitting? You're never going to work again just because you got one successful trade?
Yeah.
Relax, guy.
Especially like it was a once in a lifetime opportunity.
For sure.
Those things, I mean, I can see something like that happen again, maybe in like 20, 30,
Yeah, and I'm going to have
40
money
years,
next time it happens.
without a doubt. But like, yeah, if you caught that whole dip and pop up again, then extremely lucky.
Bro,
Great
people
time.
like literally tripling their money, bro. Putting in like 40K, coming out like 120K.
What's his name? Ackerman. You know,
Bill?
my boy Bill, bro. He turned. I forget the exact number. I was just reading about this the other day. It was like
Oh, I saw it too.
he turned. Let's just say it was like, I think it was like 300 million to like
Was that ridiculous? Like 26. It wasn't like.
it was something million to something billion.
Yeah, it was a lot of billion though.
And
it
he
wasn't
did
that
it.
this small.
He did it as a result of going long on a bunch of companies right after everything dipped. Genius. And he was ready for the drop. That's why you gotta get into this type of work now.
Oh my gosh.
27 million into 2.6 billion.
Bill Get Money Ackman, bro. Because the thing, I remember I saw this and what they said was, yo, like Bill Ackman, he goes on like what CNBC or something like that, right? And he's like basically putting on a show. He's like, you know, like the market, like this corona environment is done. It's done. All the stocks are done for, right? So like once everybody started panicking, he already had what he needed set up, and he just capitalized crazy. That's why they said that he like, it was a term they used that's not coming to my mind right now, similar to market manipulation, but not, might have been actually market manipulation, but similar term basically, saying like, yo, what he did was wrong, and you can't come out and like put so much fear into like the public, especially on such a large platform, and when you're so prestigious, like you're basically like fixing the market for you to do what you got to do. And he was like, yo, this is just how I felt.
I mean, that's what my boy Presidente over at Barstool does. Like, he's a big time day trader. He'll be like live streaming. I think it's called like Davey Day Trades, and he'll say like, "Oh, I'm really liking this company. Buy." Everyone who watches Barstool, which is a lot of people, is like, "My boy Davey's doing it." Like,
I'm gonna do it too.
And so he also, to some degree, probably not as much as Bill Ackman, but has some power to like move a market. Is that wrong? I don't know.
I mean, if he really liked that, I mean, it
But
can't be wrong.
if I was in that position, I would do the same thing. I'm just telling the viewers what I like.
That's a fact.
If the market moves in my favor afterwards.
But the thing was, he did the opposite of what he said, though. He said listen, get it how you get it, bro. I'm gonna say I'm not gonna say I wouldn't do it because it's hard. When you're in a position, it's hard. Morally, it's very wrong. But it's like if you already know you can make 22.6 billion, all you gotta do is go on TV and just say what people think already. That's really all he did. People thought that the market was gonna go down. He basically told them, yeah, it's gonna go down. The market went down, and he made money.
I mean, and what else was he supposed to say in that position?
Exactly.
Like, he couldn't have been like.
He didn't even know though.
Had he told you, yo, get ready to invest, and then think he can't predict the future. He made a bet. He literally said 27 million. Yeah. So you made a bet. Had he told a bunch of people, yo, get in right now, he could have been responsible for like a bunch of other people losing money.
That's a fact. Now, Bill, he moved tactical. That was a very tactical move.
He's a genius.
And I respect him. I mean, he had a lot of controversy with like that Herbalife short that he did before. Like some wild stuff that he was doing. He shorted something that actually kept on going up, and he lost like billions of dollars for his clients. But other than that, I like Bill.
Yeah, I mean,
very solid guy.
When you in this business, like you can't get them all right. Like
That's
you can't catch them all. But
the people think that you get even Warren Buffett can get them all right. You might get a good percentage, but he can't even get them all right.